Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Tuesday, September 26th, 2023. And our top story today, mortgage rates get closer to their yearly high. And joining me now to discuss this and a lot more, Deidre Woollard is with the Motley Fool. Deidre, always great to see you. Thanks so much for joining us on the program this morning.
Happy to be here.
All right, Deidre, last week the Fed had an announcement and they basically said they were going to kind of hold rates steady. I think they had a bit of a hawkish message in general about the economy. But I want to talk about mortgage rates. So let's start there, then we can kind of delve deeper into the residential market. How are mortgage rates doing? I seem to have read that things have kind of ticked up a little bit.
Yeah, they have. We've hit numbers over 7%, which is, that's the highest it's been in a very long time. So that is absolutely having an impact on the housing market.
And let's talk about the impact of the housing market. So as we have talked to you, before the pandemic, after the pandemic, housing prices were going up. And there wasn't a inventory as would be needed to supply the marketplace. How are we doing with, home buying sentiment, I guess? Let's start there.
Well, I'd like to say we're better, but we're not. So the most recent numbers from the National Association of Realtors show sales down about 15%. Unfortunately, prices still going up about 4%, and the average home price is over $400,000 nationally. So, and the inventory problem, you and I talk about it every time. It's at about 3.3 months. That's about half of what it should be for a normal market. So you've still got this issue, and especially with mortgage rates so high, there is very little incentive for someone who, even if they want to move, if they've got a 3% mortgage and they have to go to a 6 or a 7, they don't want to do that.
Yeah, you're almost doubling your mortgage interest, right? I mean, you're doubling your cost when it comes to borrowing money. It doesn't make sense. Last time we spoke, we talked about the boomers, a little bit older than I am, dominating the market and being able to have the equity in order to buy a home, maybe nudging out first-time buyers. Deidre, is that still the case?
It is still the case. So first-time buyers in August responsible for about 29% of sales. So that's still pretty good. And some of that, it turns out that a lot of those boomers are helping their children get those down payments. So that is some of the benefit here.
Oh, maybe I should ring my mom and dad. Maybe they'll help me out with a first-time down payment. Mom, if you're watching, Dad, if you're watching, I may be calling. Deidre, in all seriousness, now, can we shift a little bit? I want to talk about the rental market because a lot of people moved out of Manhattan, some of the larger cities during the pandemic. They seem to have come back. If you can't buy a home, you want to be a first-time buyer, but you just can't get into a home because of the cost. Maybe someone's nudging you out of the market. You can't put all the cash down or whatever. How's the rental market doing in some of these major cities and maybe in suburbia?
Well, it's very city specific. It was up and down during the pandemic. It's stabilized on the high end. One of the issues in some cities is we are seeing a little bit of oversupply. So there's a lot of investment in multifamily. So in some markets, Dallas, for example, there's a little bit of oversupply, especially at the high end. But at the lower end, there is still absolutely a need for affordable rentals, and there are not enough of them.
Yeah, there aren't. I mean, when I look here in Charlotte, the numbers, and we're not even talking like luxury rentals, Deidre. We're talking just, I would say, regular rentals. You don't have all the amenities. Those numbers are going up through the roof.
Yeah, absolutely.
When it comes to, let's go back to home buying for a second. It used to be the kitchen, the family room, were the big spaces that really drove someone to buy a home, not buy a home. And that was the area that you really wanted to spice up or spruce up before you sold a home. That's still the case. People still looking at the kitchen, whether or not you have all the latest appliances. Are you energy friendly, for example? Or is it I'll take what I can get and maybe upgrade later?
With it, it's both, because with inventory so low, sometimes buyers have to take what they can get, but buyers also they still want an open floor plan. They still want all of those appliances. It's interesting on the new home market. One of the things that KB Home, they recently reported earnings that they're seeing is people want they're willing to compromise a little bit on the size of the home, but they still want a certain number of bedrooms, partly because a lot of people are still working from home.
And do people want homes or do they want condos? I mean, when I think of a home, we've talked about this. I think about fixing the roof. I think about mowing the grass. I think about maybe an HOA. People still thinking about that, or do they want something a little bit more manageable, or does it matter by like the type of family that you have in your age range? So if it's just two of you, maybe you don't need all that.
You'd think that would be true, and I'd like to see more people go for condos, but the whole idea of a home of one's own continues to be really popular. It's one of the reasons on the rental side that you have that strong demand for single family rentals. People want the backyard. They may not want the maintenance to some extent, but they still want that traditional house.
Yeah, they want the picket fence, the dog, the 2-car garage, all the accoutrements, the fire pit, all those things. It seems like there's like this image that people kind of buy to. Deidre, I need to take a very quick break. When we come back, we're going to talk about commercial real estate, get Deidre's opinion on that. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network. Well, Deidre, thanks as always for staying with us. Really appreciate you hanging around for segment number 2 this morning.
Glad to be here.
Yeah, it's a fun one. So we're going to switch gears now. We'll talk a little bit about commercial real estate and kind of dovetailing into what we talked about residential. Let's kind of pick up the conversation. All those empty office buildings, what do you do with them? People aren't necessarily returning back to work. Maybe part-time. I know some of the tech companies have forced people back or tried to force people back. But what do you do with those empty office spaces that are out there? Are they being rented for something else?
Yes and no. I mean, there's some conversion happening, but we've talked before. The converting to residential is challenging for a lot of buildings, especially if you've got the big glass curtain wall and you have, the plumbing, the floor plan. There's lots of considerations. So that's becoming bigger. We're starting to hear more stories about it, but I am still hopeful that we are going to see some return to work. We're still in end of September now, looking toward a lot of the office mandates were sort of for like mid-September, early October. We are seeing some signs of life, even in San Francisco, which is interesting, partly because I think the Silicon Valley area in general, it's reinventing itself as like it was once the home of tech. Now it's the home of AI. And that is actually driving some interest as new businesses start to form.
So we talked about office space, Deidre, and I want to get to banking in a few minutes, but Are there other sectors? Commercial real estate is so broad, right? So we've talked to you about cell towers, data centers. Where are the best investments, I guess, if you're a commercial real estate investor? Where are the best subsectors to look at?
I always look at what some of the companies like Blackstone are doing. Watch those big institutional investors, and what I'm still seeing is the demand for industrial. We saw the e-commerce boom during the pandemic, still happening a bit. I mean, industrial, the prices aren't as high as like rising up faster and faster as they were, but there's still an undersupply there. So industrial continues to be big.
And in terms of the banking, when I kind of bring it back to banking, we saw Silicon Valley Bank. There were a whole bunch of other banks that had some challenges. And have those abated, or is that still being able to lend, being able to borrow? Is that still a critical detractor from the market today?
There is still absolutely a commercial real estate loan concern. It's hard because it sort of it comes up in the news and then it disappears, but it hasn't gone away. This is a slow growing problem because as companies try to refinance loans, they're finding it harder and harder. WeWork, for example, is going through this thing where they announced they're going to try to renegotiate a bunch of their deals, so that's going to have an impact on things. We still have we have an elevated rate of distress when it comes to commercial mortgage-backed security loans. One study I saw said that the rate of distress is about 7%, so that's elevated. So that is absolutely something to still keep an eye on.
Yeah, and going back to artificial intelligence, I mean, does that, I know it's kind of, I want to say it's in its infancy in terms of adoption. I mean, every time you turn on the news, some industry is adopting. We had ChatGPT several months ago. Now all of a sudden we've, with NVIDIA doing so well and others, the conversation's really shifted to AI. But does that necessitate more data centers? And I remember when Siri first came out, I think that was the Apple assistant, and they would say how it stored all this information. Does that artificial intelligence necessitate more data center supply needed? Do we have enough? And is that potentially a place where you could see investors park some of their money?
Yes and no. Yes, there's absolutely a demand for data centers, and the big companies are still building them. It's tricky. There's been so much consolidation on the real estate investment trust side that there aren't as many publicly traded data centers to invest in, and a lot of the companies like a Meta or an Alphabet are building their own. It's interesting. You always see these deals sort of happen in the middle of nowhere, and a lot of times Alphabet or Meta, they will come into a town. They won't even sort of tell the town what company they are, and then it's sort of revealed later. But yeah, definitely still a demand for data centers. It's harder and harder for investors to get a piece of that.
Yeah, and it's interesting. You just talk about some of these bigger tech companies. Every time you read the news, Google, Meta, Amazon just announced, I think they're enhancing their Alexa with AI. I thought it already had AI in it, but maybe I was wrong. It just seems like that's a pretty hot trend. Deidre, I want a last question for you, and this is, I want to talk about commercial real estate starts for a minute. We've talked about some of the challenges in terms of getting funding. Are they still building office buildings? And now I look out the window here in Charlotte, there's an office going, or what looks to be an office building, a commercial space going up right next door. But is that the case around the country in some of the bigger cities? I think like New York, they're always building on top of, in that city.
Well, it depends, because I mean, if you already had the financing in place and you already had the project, already going, you sort of have to continue it. There have been some changes in plans. So like if you were about to build an office building at the, as this sort of evolved, maybe you're able to convert to residential depending on zoning and things like that. But there is still building, but not at the rate it was right now.
Yeah, and what I think about is all the construction workers. Where are they going to go if they're not building buildings? I mean, these are iron workers. A lot of them are laborers, carpenters, electricians, elevator operator engineers, right? So, where are they going to go for an opportunity if they're not building office buildings because we need them to do their job. Deidre, we're going to have to leave it there. Always great to take a tour around the real estate marketplace with you. Thanks so much for joining us, and we look forward to having you back on the program again very soon.
Thank you.
That wraps up this episode of BRNAM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest curated news and lifestyle, wellness, finance, tech, so much more, all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? Well, visit our website. We're back again tomorrow with another edition of BRNAM. We'll have another very special guest and a great topic. Until then, I'm Jeff Snyder. Stay safe. Keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.